Hey there everyone, welcome back. Today I'm going to talk to you about a topic that I get a lot of questions on, and it's something that you're not going to be able to bypass, whether you're going to be a business owner or just a normal person working for a salary one day. You are going to get to do with it, and I'm obviously referring to taxes. Now, what is tax? Let me quickly explain to you in my own words. It's basically a part of your money that goes towards the government. Well, every month, every financial year, it doesn't matter. But you pay money to the government, and in return, they provide us with public services like health services, education services, a proper infrastructure, just to name a few. But that's not where it stops. Taxes are only also the biggest source of income to the government. So that's why they are so concerned about taxes, because if the people in the country don't pay their tax like they're supposed to, they don't get an income, and the country will basically fall apart because they won't be able to fund these public services. Right, but the tax doesn't just stop there. There are different forms of tax, and I'm quickly going to explain to you the different forms, and I'm going to use a few examples to make it easy to understand. Right, so first of all, we split tax into two groups called direct tax and indirect tax. Right, now, direct tax is money that either comes from your salary in the form of personal income tax, also called pay as you earn, where the government, well, they take your salary, and then on certain scales they determine how much tax you should be paying. Now, there are different structures that different countries use to determine these tax rates. In South Africa, for example, the more you earn, the more you pay. In other words, in a percentage, if you earn, say, 200,000 Rand a year, then you might be paying about 15% tax. If you earn 800,000 Rand a year, which is quite a lot, you might be looking at about 40% tax. All right. So it depends on how much you earn, and that will determine the amount of money that you will pay towards tax. The more you earn, the more you pay. Then other countries, doesn't matter what salary you earn, everyone pays the same rate. Okay, everyone in the country will, for example, pay 10%. Okay, and then very few countries that I know of use the opposite of the first one that I've mentioned, where the more you earn, the less money you pay for taxes. All right, so that's the three ways that countries go when it comes to paying personal income tax. But fact of the matter is, personal income tax is an example of direct tax. All right, then you also get what they call company tax. Now, companies, either private companies or public companies, doesn't matter, they have a fixed rate of 28%. 28% of their net profit goes for tax. All right, but that's not where it stops. Dividends, you also get dividend tax. Now, dividends is that income that you receive from the shares of a company that belongs to you. All right, so when you make a profit or earn an income from dividends, you have to pay tax for that as well. All right, and that rate is 15%, 15%. All right, so that's direct tax. Personal income tax, which is subtracted direct from your salary, depending on how much you earn, and company tax, which is set at 28%. And then you also have dividend tax, which is 15%. Right, the other part is what we call indirect tax. Now, that is a form of tax that you pay when you buy something else, basically. All right, so you don't feel like you're paying for taxes, but in actual fact you are. Like, for example, VAT. Now, VAT stands for Value Added Tax. Now, that's a certain percentage that's added onto certain products that you and I buy at shops. Now, the current VAT rate is 15%. All right, it was 14% for many years, but I think, if I'm not mistaken, in 2018 it changed to 15%. All right, so that's VAT. Certain products are without VAT. All right, so that's VAT excluded. Like, for example, brown bread, basic like maize meal, basic products that all of us need to survive. Now, the government feels that these are necessities and they don't charge or add tax, or rather VAT, to those products. All right. So that's one example, is VAT. The other example is what we call excise duties or sin tax. Now, sin tax, I remember this one year I had a person in my class, and I asked the class what sin tax is, and the guy said to me, "You know what, sir? In the beginning, there was this place, literally like in the beginning, there was this place called the Garden of Eden. And there were two people living in the Garden of Eden, namely Adam and Eve. And because of the sin that they committed back then, we are still paying tax." Now, that's as far from the truth as you can possibly find. All right. Sin tax is the tax that we pay on alcoholic and tobacco products. All right. Just like VAT, it's that little bit extra that is added to the price, together with VAT. All right. So the reason for that is, number one, the government wants it to serve as an income for them, and obviously they want to discourage the public to buy these products because it is bad for your health. Okay, so that's sin tax, is tax on tobacco and alcoholic products. Right, then you also get import tax. Now, import tax is the tax that you pay for products bought bought overseas and brought into the country's borders. All right, and then you get fuel levies. All right, fuel levies is also a form of tax that we pay for when we fill up our cars with petrol or diesel. All right, it's also that price per liter that we pay, say 15 or 16 rands per liter. A certain amount of that price per liter goes for fuel levies, which is also a form of indirect tax. Right, so just in a nutshell, to repeat, we get two types of tax: direct tax and indirect tax, where direct tax is personal income tax and company tax. Right, indirect tax is VAT, fuel levies, sin tax and import tax. So I hope you understand taxes better, and until next time, stay safe, and thanks for watching. Cheers.